If something happened to you tomorrow, would your family be protected or would they scramble to figure things out?
Bruh.
Hi, I'm Cecilia with Nelson Wealth Strategies, and today we're exploring an important topic: life insurance. Wait. This isn't about selling you a policy or promising guaranteed returns. It's about understanding how life insurance works and why it's more important than just a piece of paper. Let's start with the basics. What is life insurance really? At its core, life insurance is a contract between you and an insurance company. You agree to pay a certain amount called a premium, and in return, the insurance company agrees that if you pass away, your loved ones will receive money, also known as a death benefit. But this isn't just about money, it's about protection and responsibility. Life insurance is designed to provide financial support to people who depend on you. This includes your spouse, your children, your parents,
1 hour later.
your business partner, and anyone whose life would be financially impacted if you were no longer here. Think about it like this. If you didn't come home tomorrow, who would pay the mortgage or the rent? Could your family keep up with your bills, the groceries, or tuition payments? Would your kids still have the same opportunities you dreamed for them? Now that we understand what life insurance is, which is a protection tool, let's talk about the two main types of life insurance you'll hear about: term life insurance and permanent life insurance. These two types work very differently, and knowing the difference is the key to choosing the right kind of coverage for your situation. Term life insurance, also known as simple and cost-effective protection. Term life insurance is the most straightforward kind of life insurance. It provides coverage for a specific period of time, like 10 or 20 or 30 years. Think of it like protection during the years of when someone is counting on your income the most, maybe while raising your children or paying a mortgage or helping a spouse through school. Here's why many people start with term life insurance. It typically is the most cost-effective option. You can get a high amount of coverage for a relatively low amount cost. It's designed to protect your loved ones during your most financial demanding years. But here's the catch. Term life does not last forever. If the term ends and you're still living, great, but the coverage ends too. There is no cash value, no money returned unless you have some special rider like a return of premium or something. Another example, let's say you're 30 years old, married with 2 young children and a 30-year mortgage. If you pass away unexpectedly in the next 20 years, your family might struggle to afford the house, the bills, or education costs. A 20-year term policy can provide financial stability during those critical years. Now let's talk about permanent life insurance. This includes types like whole life insurance and universal life insurance. Unlike term insurance, permanent insurance is designed to last you an entire lifetime. Well, as long as you're continuing to pay the required premiums, of course.
Boo!
But here are the main features. Because it's lifetime coverage, your policy doesn't expire after a set time. It also may build cash value over time. Typically, how that works is a portion of your premium goes into a policy account that can grow. You may be able to borrow or withdraw from this cash value depending on the type of policy. However, it's important to understand this is not a savings or investment account. Cash value can take several years to grow. Loans or withdrawals can reduce the death benefit and may have tax implications. And yes, it typically costs more than term insurance. So who might permanent life insurance be good for? Someone who wants to leave a financial legacy or inheritance, or a business owner with succession planning needs, or even individuals who want coverage no matter when they pass away, or someone who has long-term financial obligations like a dependent with special needs. So which one is better?
What's Pakistan doing today in the field?
Neither one is better. They simply serve different purposes. Term life equals temporary protection for temporary needs. Permanent life equals lifetime protection for long-term needs and estate planning. Some people even choose a combination of both, using term life for income protection in their working years and a smaller permanent policy for their long-term coverage or legacy planning. Understanding the difference between term and permanent life insurance is the first step towards choosing the kind of protection that fits your life, not someone else's. Now that we've covered what life insurance is and the two main types, let's answer the real question. Why does life insurance matter so much? Life insurance isn't about death. It's about what happens to the people you love after you're gone. It's also about making sure that even if you're not physically here, you're still providing and still protecting, still supporting the future that you planned for your family. Here are the real reasons why people get life insurance. Number one, income replacement. If your paycheck stopped tomorrow, how long could your family keep going? Life insurance can step in to replace lost income so your loved ones can stay in their homes, pay the bills, buy groceries, and keep life as normal as possible during an emotional time. This isn't about money, it's about stability and dignity. Number two, paying off debts and major expenses. Many families rely on two incomes to afford their homes, their cars, education, and childcare. If one income suddenly disappears, it can create financial stress on top of emotional grief. Life insurance can help cover mortgage, rent, car loans, student loans, credit cards, medical bills, funeral, final expense, you name it. It prevents your loved ones from having to make painful decisions, like selling a home or moving in the middle of heartbreak. Number three, protecting business owners. If you're a business owner or a partner, life insurance can protect more than just your family. It can protect your employees, your business, and your legacy. It can also fund buy and sell agreements, replace a key person in the company, or provide cash to keep the doors open while things transition. Without it, a business might be forced to shut down the doors or be sold under pressure. Number four, generational wealth and legacy planning. For some people, life insurance is a part of a legacy strategy. It's a way to pass wealth to children, pay estate taxes, or even make charitable donations. I like to say this: you don't buy life insurance because you're going to die. You buy it because you love someone and you want to protect them if something happens. And that's why life insurance matters. It keeps dreams alive. It takes care of tomorrow when you no longer can. Life insurance is about love, not fear. Before purchasing any life insurance policy, it's important to slow down, take a breath, and make sure you understand what you're buying. Life insurance is a financial tool, but it's also a long-term commitment. So let's talk about the key things to consider before you sign anything. Number one, start with your why and why you're protecting. Before you can look at prices, riders, or benefits, ask yourself, what am I trying to protect? Is it your family's income, a mortgage, a business, aging parents, or a child with special needs? When you're clear on your purpose, choosing a type and amount of coverage becomes much easier. Life insurance should never be about buying the cheapest policy or the one with the most features. It should be about meeting a real need. Number two, how much coverage do you actually need? A common rule of thumb is 10 to 15 times your annual income, but that's just a starting point, not a rule. You should also consider the mortgage that you have or rent balance that you may have, household bills, child care expenses, college tuition for your children, outstanding debts, final expenses like funeral costs, future goals for your family. You don't need to be exact, but having a general estimate helps make sure you're not underestimating or underinsuring yourself so that you can pay for what you really need. Number three, choose what you can consistently afford. This is so important. A good policy is one that you can afford to keep. A policy does not help your family if it gets canceled after a couple years because it became too expensive. So be realistic. Don't stretch your budget. Start with what's most cost efficient. You can always add or adjust more coverage as your income grows. Number four, health and age matter. Life insurance is one of those things that become more expensive the longer you wait. Your age, medical history, lifestyle habits all affect approval and premium costs. Typically, the younger and healthier you are when you apply, the better chances of you qualifying for lower rates. Waiting until after a major health event can make coverage more expensive or in some cases unavailable. Number five, read the policy terms. Every policy has limits. Every policy has rules, like when it pays, when it doesn't pay, what happens if you miss payments, how beneficiaries receive the death benefit, fees or reductions, if you take loans from a permanent policy, all kinds of things. But that's why it's important to take your time and read the policy and ask questions if something isn't clear. Number six, get professional guidance. Life insurance can be simple, but the details like tax implications, riders, term conversions, business plannings can get complicated quickly. Working with a licensed financial professional can help make sure things are aligned with your goals and your budget and your family needs. So before you buy, remember, Know your purpose. Calculate what you need. Stay within your budget. Apply early when you're insurable. Understand what you're signing. And don't hesitate to ask for help. We covered a lot today. What insurance really is, different types, what matters, what to consider before buying. So let's bring it all together. Life insurance is not just a policy. It's not just paperwork you fill out or another bill you have to pay each month. It's a promise. It's a way of saying to your family, if life takes an unexpected turn, I've already taken steps to protect you. It's not about expecting the worst to happen. It's about loving your family enough to plan for them, even in a moment that you hope never comes. And here's something important to remember. You don't need to know every answer right now. You don't need to be perfect or wealthy or have it all figured out either. You just need to take one step, understanding what protection looks like for you and the people you care about. So whether you're just starting a family, building a business, supporting Asian parents, or thinking about building a legacy, life insurance can play a meaningful role in that journey. If today's video helped you think about these things in a new way, make sure to like, subscribe, or share it with someone who you think can use this information. And if you have any questions about how this applies in your own way and to your own situations, I encourage you to speak with a licensed financial professional who can help you explore your options.